Crude prices were climbing Tuesday. OPEC cut production in November to its lowest level in 2 years, according to a report out today, which brings us to the Brent trade, which took a hammering on Monday. With us to discuss it, as always, is Dan Dicker. Dan, thanks so much for being with us. So we saw the Brent trade take a hit. What was going on there?
Well, there's two things that are going on. Okay. One, when you talk about West Texas making an increase, what you really have is West Texas trying to catch up to what has been a higher global price, which has run anywhere from $15 to $18 in recent weeks. And what you have in the Brent market is you've had a couple of negative economic reports, particularly the German manufacturing report 2 days ago, which was very bad, kind of calls the European recovery into question a little bit. So what you have is you have this sort of dichotomy, the refilling of the Keystone line, that is that line that already is built, that runs from Cushing down to the Gulf, which people expected. Mm-hmm. You did have an enormous drawdown because of that inside Cushing in the last EIA report. And those things have combined to allow TI in some ways to try and catch up to what has been a higher global price.
Mm-hmm. So let's turn to the refineries. We just saw that the refiners got an upgrade from JPMorgan and UBS. Are you surprised by this?
Well, I think they're late to the game, and that's really what's important here. We had, or at least I had recommended refiners because of what I thought was a dichotomy that was going to go on between U.S. and global crude, which we saw, and we saw these spreads go out to $15, $18. But now that we've had at least what I think is a very temporary move back to where the spread is now to a much more sort of interesting $10, where you're going to have that come against, or at least work against, what have been upgrades from UBS and Stifel and JPMorgan on the refiners. So you have a lot of retail trade that's kind of rushing into the refiners, and I think at a late point. But if you were here with me and you have caught the refiners already for a 15 to a 20% gain, depending on where you were in Valero, Tesoro, or Phillips 66 or Marathon, I think this is a moment where, at least as a trade, you can at least schnitzel out of your position or not, or even get out of it altogether, waiting for a better price to get back in. I think that this dichotomy between global crude and U.S. crude will be a major theme of 2014. So it's not a trade I want to be out of for long, but it is something I do want to be out of right now because I think there will be better prices at which you can get back in shortly.
Indeed, yeah, it's been quite a year to watch that spread, and Dan Dicker is always giving investors a good bit of advice. Thanks so much. For The Street, I'm Joe Deaux.